Hi everyone, how are you? So welcome back to today's session, and today's topic is fraud risk in audit. We have completed the audit risk in the last session, and today's topic is fraud risk. So wow, so there are two things while auditing. One is error. Error means unintentional mistake. So because of misjudgment or omission of any amounts or disclosure, errors occur. But fraud is something which is intentional act by the management. So one or more individuals can be involved in fraud in any company. It might be higher management or any employee of the company because of whom the frauds occurring in the financial statement, frauds occurring in the company. So firstly, we will discuss what's the fraudulent financial reporting. This is by the management. So, if the financial report is misleaded, like the amounts or the disclosures are not properly presented in the financials, then it's the fraud by the management to mislead the financial account. So it is the intentional misstatement, including omissions of amounts or disclosures in the financial statement to deceive the financial statement user. So if anyone is even omitting any part of the financial statement, any amount to deceive the financial statement user, it comes under the fraud only. Further, for few of the examples are manipulation or falsification or alteration of the accounting records or supporting documentation from which financial statements are prepared, misrepresentation or omission of the events, transaction or significant transactions from the financial statement, intentional misapplication of accounting principles or cooking the books. Another thing comes here is misappropriation of assets, which is also called deflection. So theft of the entity's asset, which are like often concealed by the false or misleading records or documents, embezzling receipts or stealing physical assets, inventory, intellectual property, causing entity to pay for the goods or services which have not been received, or misusing any entity's assets. So one is a fraudulent financial reporting and another is misappropriation of asset. Both of these comes under the fraud by the management, fraud by the company. So what are the illegal acts? So one another thing here comes is the illegal acts. So if anyone is violating the prevailing laws or regulation or even the transaction entered by the entity or by TCWG on the entity's behalf, that comes under illegal acts. What is the auditor's responsibility here? So auditor's responsibility is to obtain sufficient and appropriate audit evidence regarding financial statement material amount disclosures that are determined by those laws and regulations. Other laws and regulations that do not have direct impact on the financial statement, like direct laws and regulations which have directly impact on the financial statement, but other laws and regulations which even do not have the direct impact on the financial statement but have chances of impacting or but have the chances of defeating the users of the financial statement, that also comes under the illegal act, and auditor has the responsibility to uh, verify that as well. Here to comply with the laws and regulations is the responsibility of the management to timely pay to the officials or to timely file the returns. All these comes under the legal acts, and this is the duty of the management. But if the management has not complied it on timely basis and auditor has identified, and management is just trying to cover up the things without any genuine reasons or without any proper reasons, then that comes under the illegal acts. So here auditor becomes aware of the actual or suspected non-compliance, and then they need to obtain auditors need to obtain the understanding of the nature of the act and the circumstances in which it has occurred, and further evaluate the financial statement. quantities and qualitative both aspect needs to be evaluated, like if there is any bribery or if there is any material contingent liability, all the things like finance qualitative as well as quantitative, uh, all should be verified by the auditor in this case. So now we will understand what are the fraud risk factors. Fraud risk factors or fraud triangle or event or conditions that indicate fraud. All these are the same thing. So if we talk about the fraud risk factors, it is made up of three things: incentives or pressure, opportunities, and rationalization. We also call it as a fraud triangle. So incentive or pressure is one, opportunities are the another, and the rationalization is the third one. So incentives means personal gain from anything, or pressure means to from the inside or outside the entity. So incentive or pressure to commit the fraudulent financial reporting may exist when management is under pressure to achieve certain targets or financial outcome. Incentive or pressure to misappropriate assets may exist for individuals because individuals are living beyond their means. Obviously, that's the human nature, and by because the it's the nature of the human to just get more personal gain from anything. So one of the fraud risk factor is this, and fraud happens because of the personal gain or from the pressure. Opportunities to commit the fraud, it may exist when individual believes that internal control are weak and that can be overridden. So opportunity is a factor that arises when the internal controls are weak and the employees in the company are aware that there are chances and there are the possibility to commit the fraud because there is no strict internal control. Example here is individual is in the position to of the trust to know the specific internal control deficiencies. Like if the TCWG or higher management knows that the internal control is weak in the certain areas, they may they may gain the opportunity to defect the financial statement and to have the personal gain from that. Attitude and rationalization of the fraud by individual. This means attitude, character, or ethical values allow them to knowingly or intentionally to commit a dishonest act. However, even honest individual may commit fraud in the environment that imposes sufficient pressure on them. So if we see overall, like all are the pressure or the personal gain because of which uh, people are committing the fraud in the companies, because the internal control is weak or the attitude of the person is such, the rational people are such of rational nature that they think that it will have help me to have personal gain, or if anyone have pressure from the any management or any person from the company, then in such circumstances fraud happens, and these are the fraud risk factors. So determination of the fraud risk factor is present, and whether it is considered in the assessing fraud risk requires a professional judgment by auditor. It is not something that is seen in the financial statement that can be prima facie found in the financial statement, but it happens. It is known through the judgment, through the professional skepticism and through the judgment of the auditors, because they have years of experience in auditing the financial statement. And if the auditors identify that the numbers are not matching, if there is higher variances, if the profits are not expected, or any such circumstances because of the judgment of the auditor, in such circumstances fraud risks are identified. So here, what are the auditor's responsibility in the consideration of the fraud risk factors in the financial statement? So auditor's responsibility is firstly to be professional skepticism throughout the audit. They should be totally independent and have the mindset of is being skeptic throughout the audit. First one is this. Another one is the discussion of the fraud risk with the engagement team. Like if they have identified or what are the fraud risk factors, and that needs to be discussed with the engagement team. After that, we will discuss the further procedures. So for the professional skepticism, uh, first thing is to discuss the fraud risk with the management team. Like if any auditor has identified that there are chances of having fraud risk in the certain areas, they need to discuss with the management why the accounts are manipulated, why the accounts are not as expected, what is the reason behind it. Then risk assessment procedures need to be done, and related activities like we need to focus on that area. The risk can get higher because of fraud risk. So risk assessment procedure is the second duty here to do by the auditor. Then identify and assess the fraud risk. After RMM has been done, then from that further activities fraud risk is identified. Firstly, professional judgment is done, and we have the mindset that this area can be misleaded. But after doing certain procedures of RMM, we are aware that the fraud risk exists, and we have to further proceed for further audit on that area. And then we have to provide to the response to the assessed fraud risk, what response we have finalized in that case. And then we have to do evaluation of the audit evidence and the communication about the fraud. These are the process that auditors need to perform when he or she has identified the fraud risk in the company. So as said, discussion of the fraud risk with the engagement team. It includes the exchange of the ideas or brainstorming about how and where entities' financial statement might be susceptible to the material misstatement due to fraud, how management could perpetrate and conceal fraud, financial fraud reporting, how assets of the entity could be misappropriated. Discussion should also address the consideration of the fraud risk factors, risk of the management override of the controls, professional skepticism to be maintained throughout the audit, and how to respond the susceptibility of the entity's fraud risk identified. What are the risk assessment procedures we will do? So here, for the risk assessment procedures, auditor will inquire with the management, TCWG, internal auditors, employees, legal counsels, and others within the entity. Any usual or unusual expected relationship that has been identified, or any evaluation of fraud risk factors that has been identified. This is also part of the risk assessment procedures, and auditor will have more focus on these areas. Identify and assess the fraud risk. So here auditor will consider the risk attributes of the fraud risk factors, like type of risk that has been identified, magnitude of the risk, likelihood of the risk, and perceiveness of the risk. So these four things are the something that will help us auditor to identify and assess the fraud risk factors. So it's it is by default that auditor presumes that risk is present in every audit. Like auditor has that mindset, auditor does the audit with that mindset that risk is in the every audit. So risk of the fraud in revenue recognition. Revenue is very critical part of any organization, and auditor have the mindset that revenue should be considered as that area where it has the highest chances of having the risk, fraud risk. And management override of the control. By default, we consider that the management has the possibility of overriding the internal control. So it is the by default risk that every organization have. How does auditor respond to the assessed risk? So here are the how to explain overall responses. Like general response is that team who are involved in the audit engagement, they assign and supervise and also evaluate whether the selection application of the accounting policies by entity indicate the fraud, especially if any measurement or complex transaction is present in that. Also incorporate of the element of the unpredictability in the selection of nature, extent, and timing of the audit procedures. This was the general response. And the specific response comes here is that test of the controls alone may not be sufficient because of the management override of the control is present in every entity. Auditors identified that management is under the pressure to meet the target. So management may override a control to meet that target, due to which the fraud risk presents in the any specific area of the financial statement. So how auditor will respond to this risk? by examining the journal entries and adjustment to the prepared financial statements, reviewing the accounting statement for the biasness and evaluating the fraud risk, and evaluate the business rationales for the significant unusual transactions here. After that, we will discuss the evaluation of the audit evidence. We will evaluate audit evidence through analytical procedures, through the consideration of the identified misstatement. All these are the substantive procedures which will help us to which will help us to evaluate the audit evidence for the fraud risks that has been identified. Like if there are any large transactions or any complex transactions for which estimates are involved, judgments are involved, then to mitigate the fraud risk, specialists are involved, specialists are used, the special knowledge of the specialist team are used here to mitigate the fraud risk and to give the reasonable assurance on the financial statement. Auditor should communicate with the management and TCWG about the fraud that is expected or that actually has been identified, and also the communication to the outside party. To communicate to outside party is not the responsibility of the auditors, rather it's the responsibility of the management. When the financial statements are signed and approved, then it should be disclosed in the financial statement if there is any material misstatement, material fraud which might have impacted the users of the financial statement in that case, such as any legal or regulatory compliance has not been made, or any a long due a long vendor's payment is not made. All these material transactions which might impact the users of the financial statement, this should also be reported. And documentation again is the important part. Auditor's responsibility is to document all the fraud risk factors that has been considered uh, to identify the fraud risk and how that has been addressed, and if that has been reversed by management or not, corrected by management or not. All this should be documented properly and thoroughly throughout the audit. So this was all about the fraud risk that we have learned today. I hope you all gain a good knowledge, and if you have any questions on this, please feel free to comment down and I will answer your queries. Thank you for staying connected. Bye and see you in the next chapter in the next video. Bye.